You can sell $10 million worth of gold and still have a payment problem. Think about that. The gold has been inspected. The buyer is ready. The contract is signed and ready to ship. But now there is one challenge. How does that $10 million actually get to you, the seller?
The dollar liquidity infrastructure for global commerce.
Let's say you are a gold trader in Ghana and your buyer is in Dubai. The buyer initiates the payments at their bank. They complete the compliance checks, everything is good, and the money passes through correspondent banks, foreign currency conversion, and settlement. The gold can be ready to move, but your money may still be moving through the traditional financial system. And that's where the real problem begins. Because while you are waiting for that $10 million, your business doesn't stop. You have suppliers to pay. You have another shipment to finance. You have logistics and operating expenses. So the question isn't simply, did we make the sale? It's, when can we actually use the money from that sale? And that's a liquidity problem. And for businesses moving millions of dollars across borders, liquidity directly affects how quickly you can do the next transaction. So now imagine the buyer pays using a regulated digital money, digital dollars in this case. So instead of sending the payment entirely through traditional cross-border banking systems, the buyer transfers the digital dollars from its institutional wallet to the seller's institutional wallet. The settlement can happen within minutes, just like sending a document from one email to another email account. So once the transaction is confirmed, the seller can potentially have access to the funds much faster. The seller now has options, whether to keep all the dollars, convert them into local currency, use it to pay another supplier, or fund another transaction. This is a different way of thinking about cross-border payments. And when you notice that, what did not change? The gold is still physical. The contract is still a contract. The regulators and compliance still matters. And also the banks are still relevant in the transaction. But the payment system has changed. Though the speed of payment is important, it's not the only thing that matters in transactions like this. And what do I mean by that? Imagine the buyer says, I'm not releasing the $10 million until the gold has been inspected, the documents are verified, and the shipment is confirmed. Today, different parties and systems coordinate those conditions. But with digital infrastructure, it can potentially make the payment itself more programmable. And what do I mean by that? It means making the transaction fully digital with smart rules built into every transaction. In other words, it creates conditions around the settlement, escrow, reconciliation, and automated payment workflow. The payment will only release when the system confirms the shipment and documents are genuine. And this is fully digital. And those improvements matters a lot when you are dealing with $10 million instead of $10,000. Here is another important part. Let's say you received the $10 million, but you actually don't need all the $10 million in the same country. Maybe you want to send $2 million to your supplier in another country. You want to use $1 million to fund your next shipment. Convert some into your local currency and leave the balance in dollars as working capital. Hopefully, it's generating yield. That is treasury management. The ability to receive, hold, convert, move, deploy capital efficiently becomes incredibly important. And as more currencies become digital, I think this will become even more interesting. Now, I'm not, telling any commodity trader to go out tomorrow and start moving millions of dollars in stablecoins. That's not the right approach. My advice is to start with the problem. There are 4 steps I would recommend. One is training. Understand digital money, stablecoins, wallets, and the actual business use cases. 2, assessment. Map your current payment and treasury operation. Where does money go get stuck? How long does settlement take today? What does it cost, including losses to FX? Where are the reconciliation problems? 3 is pilot. Don't start with everything. You want to pick one payment flow, one corridor, or one use case and test it. That could be revenue repatriation back to your home country or supplier payment. And you compare it with your current system. If you save on fees, time, and stress, then then you can then implement implement it. So then 4 is implementation. Design adopting the new system, the compliance, liquidity, operational infrastructure needed to scale it. That's how I would approach this. And and that's how we designed servicing our customers at Avano Labs. We are not just telling companies that they need a stable coin. Our approach is show us how your money moves today. Where is the friction? We help you to identify the capital, where capital getting trapped. Where are you losing time or money? And then can digital financial infrastructure actually improve it? If the answer is yes, then we can help you understand the technology, assess the opportunity, design a pilot, and work towards implementation. And as we build our broader infrastructure and prepare for the USDK launch, which is our US dollar stablecoin, we are beginning conversations with companies and institutions that want to understand the technology before they decide how or whether to implement it. So if you are in if you are involved in commodity trading, trade finance, banks, government, or simply running a business with international operations, and you are asking yourself, where could digital financial infrastructure actually help us? That's the conversation I want to have. So you can reach out to us at info@avanolabs.com. info@avanolabs.com, because we are beginning conversations with companies and institutions to train their teams, assess their current payment and treasury systems, identify practical use cases, design pilot programs, and help them determine whether digital financial infrastructure actually makes sense for their business. And if you want to be among the first to access the infrastructure that we are building at Avano Labs, you can join the waitlist at avanolabs.com. I'm going to keep breaking down real companies, real financial problems, and real use cases in this series. So so make sure you follow on LinkedIn, TikTok, YouTube, Instagram, and Facebook. And you can also go back and watch the previous episodes. It will help you understand the technology and the real use cases, because it's all about understanding the financial system that we are moving towards and being prepared for it.
Commerce.